Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex daily video research from the ForexPeaceArmy.com. Today the 8th of February, and we will continue to talk about the euro. Well, in general, during the previous trading session there was nothing really interesting on the daily time frame, so we have discussed this chart in the weekly thread on the forum on the ForexPeaceArmy.com. So what do we have right here? Yes, market has shown some move to the downside yesterday, but this was relatively shallow move and it hasn't reached the area that we have discussed as a target. It's around 134.60 area roughly, because this is daily confidence support, stands right here, 618 support from this low to this high, and 38 support from this low to this high. Also just below the market it's around 134.30 area, monthly pivot point and a weekly pivot support 1. Also you can see how the price action usually developed during the thrust move on the market. So you can see market just touch weekly pivot and go, touch weekly pivot and go. Here it's even hasn't touched it. Okay, but when the market retraced to the downside during the strong bull move, it usually retraced to the weekly pivot support 1. So I don't have this on this chart, but it's right here. Usually also market is trade the weekly pivot point with the probability about the 70-80%, so you can see that market hasn't reached the pivot point yet. Current weekly pivot is around 136.58. Okay, and I think that it should to do this. Well, some questions was about this double repo pattern, or does it reach the target or hasn't reached the target or not. Well, currently I think that this is not the end for the current double repo, because it hasn't reached the target of this pattern, okay, and it hasn't reached the target that we had discussed in weekly thread. It's the 100% expansion from this intraday swing, okay. There's the target around 134.60. Should also makes an agreement with this area. Well, here you can see how the 3x3 moving average, this green line, holds the recent price action. You can see how it holds this price action during the recent 3 days, and market just stands below this area. So I think that everything is in order currently with this double repo, and possibly we still can see the possible move to the downside. But how we should enter if you are not yet in the position, how we should act, current price action, where we should enter, what we should watch for. Let's take a look at the lower time frame. Also take a look that the trend is clearly bearish, daily trend, and it's very nice piercing of this MACD lines. Okay, now let's take a look at the 4-hour chart. On the 4-hour chart we see that trends bullish. Also shallow divergence with the MACD, but it's not a big deal. Here you can see this area of resistances. This is my preferable area of resistance that I will be watching for possible entering on the short side. I also talk about it in the weekly research. This is weekly pivot point that has not been traded yet. Also, because market has established new lows, these levels also drift a bit lower. So this is 618 resistance from this thrust bar. Okay, the hidden reaction point by Judd Napoli from the thrusting bar. Also, it's very close to the 38 resistance from the whole swing to the downside. So 136.40. 136.65 area that includes also the weekly pivot point. This is our area to watch for a possible weakness on the market. The hourly time frame gives us another new detail that confirms this area of resistance. Take a look at this. First of all, hourly chart is clearly bullish. Take a look at this pattern. A, B, C, 100% expansion precisely in area of 4-hour confluence resistance, makes an agreement with this area. So 3 different types of tools point on this area: weekly pivot, 4-hour confluence resistance, and Fibonacci expansion. But a couple of words about this expansion. First of all, take a look. this retracement from BC move is very shallow, so it's less than the 3-8 retracement from this swing. Okay, now let's take a look at the development. Strong up bar, so I can't exclude that the possibly market will not stop at this area, and it could show some extension of this leg, maybe to 127 extensions right here, somewhere around 136.80 area, or even to 1618. I can't exclude that, because when the market shows retracement to the 50% or even 618 or lower, well, I can say that possibly CD leg will be equal to AB. But currently, it's a risk that market can show extension. Also take a look that 1618 target from this AB move creates another agreement with this Fibonacci resistance 137.21, 127.18. So 127.21, this is the 618 from the whole swing down. Okay, so what we should do? First of all, we should wait until the hourly trend turns bearish in the confirmation of the daily trend. Currently you can see that's bullish. Okay, based on MACD trend determines by the MACD indicator. So how it will look? For example, market has reached this area and shows some signs of weakness right here, maybe some bearish engulfing or something like that. 3-drive sale maybe. I do not know what it will be. Okay, maybe it even will be the double ripple on the hourly chart. I don't know. Well, when the market turns to the downside, okay, first shown some signs of down move, acceleration to the downside from this area, this will be the just one part of the confirmation of this level. Well, another part will be if trend turns bearish. Wait until hourly trend turns bearish. Okay, when it will happen, you can enter on the shallow retracement from the recent swing on the hourly chart to the upside. Something like that. Look at this. For example, market turns to the downside, but trend is still bullish. Right here, trend has been confirmed, and then market has shown some shallow retracement to the upside. So during this retracement, while hourly trend still turns bearish, you can enter on the short side to the acceleration to the down move. Okay, that's something like that we should see in this area, or maybe in this area. I don't know where it will be, but I just show you what to expect from the market. Maybe some bearish signals, additional directionals, directional signals, something. Well, that's my view on the current situation on the euro. That being said, I think that the double repo is still in play, because market hasn't shown any meaningful retracement to the upside, any acceleration to the upside. 3x3 holds market well. Well, in general, the two levels that we should watch for. First level is 136.60 for the possible signs of weakness on the market. The second area, 137.20. Well, if we see that some sell signals in one or another area and the market shows the shifting of the hourly trend to the bearish, we can enter on some shallow retracement after the hourly trend will confirm the daily trend, when the both trends, hourly and daily, will turn bearish. That's my view. After that, we can enter on the after possible retracement like this. So for example, market turns to the downside, shallow retracement, trend turns bearish. Okay, trend holds bearish, we enter on some retracement to the acceleration. Well, something like that. I think that we should act in this manner to possess ourselves in the continuation of the development of the daily double repo. I think the target, as we discussed previously, it's round 1, 34.60 area roughly. This is daily confluence support area and weekly pivot support one.